We'll start off with the falling price of oil. It's going to be discussed at a meeting of OPEC, oil-producing nations, later on this week.
That's right. Thursday is going to be a really big day for the oil sector. OPEC facing pressure from several quarters over whether or not it should cut production to counter falling prices. Crude oil has fallen by some 30% since June of this year. That's left some weaker OPEC member nations with big budget shortfalls. Russia on Monday said that its economy was suffering by up to $100 billion a year because of the falling price of oil. Well, let's take a look at today's oil price. The Brent crude index falling slightly again in trading today. It's still under $80 a barrel. That's transforming into falling petrol prices as well. Here in France, petrol is now at its lowest price at the pump since December 2010. So it is having a knock-on effect for consumers too. Coming to a decision about whether or not to cut oil output will be a difficult one. Let's take a listen to James Bambino. He's from the energy news agency Platts.
I fully expect honestly, the status quo since 2009 has been that they held production right around 30 million barrels a day. So I wouldn't be all that surprised if they disappointed everyone and kept it there.
Let's take a look now at the stock market. It's a pretty flat start to the trading day here in Europe. Interesting, London's FTSE 100, around 30% of that index is made up of oil and gas companies. They've been suffering in recent days, which has seen that share index fall. It's down slightly in trading today. Again, one piece of companies news we've picked out for you for the markets is the company that prints banknotes in the UK, De La Rue. They've seen their profits fall by more than a third in the first half of its financial year, and its shares down 1%. On that news. I should say its profits are down by more than a third. Over in Asia, the effect of the rate cut from the Chinese central bank seems to be wearing off. One bright spot in Hong Kong, though, is the French cosmetics firm L'Occitane. They're up around 7% after announcing a big jump in profits on Monday.
All right, some news from back here in France now. The government eagerly awaiting some news from Europe about its controversial budget.
And that's expected later this week as well. France has challenged the European budget rules by submitting spending plans which don't reduce the deficit to 3% of GDP as required by EU law. Media reports now saying the Commission is likely to approve a slightly amended budget that was submitted by Paris in recent weeks. But the French government is going to be given 4 months more to come up with another €4 billion worth of cuts that will have to come from the 2015 budget.
All right, well, we'll stay with European matters. They've got some new plans about increasing growth.
That's right. We're going to have the 28 members of the European Commission agree later on a €300 billion plan to boost investment in the EU. The idea is to help European countries to invest more in infrastructure, thus creating jobs and helping the overall economy. Here's Oliver Farry with the details.
It was the new European Commission President's big campaign promise, a €300 billion plan to stimulate investment at the height of austerity in Europe. The proposal had one broad support, with good reason. Investment in Europe is in need of a push. Since 2007, it has dropped 17.9% across the Eurozone, by almost 40% in Spain, 9% in France, and even slightly in Germany. But in reality, Jean-Claude Juncker will not be putting €300 billion on the table, but 30 billion. These funds are from the European Union, the European Investment Bank and some public banks. But some say the amount is too small to do what it's intended to, give European GDP a 2% boost per year. The remaining €270 billion is to come from private businesses insured by a European investment guarantee. Infrastructure in energy, transport and digital networks are being targeted by the investment plan. The main criterion for the selected projects will be that they create jobs. Member states have already submitted 1,800 projects whose combined cost surpasses €400 billion. But the details of the financing remain vague. Some worry the Juncker plan will only fund projects that would have been realised in any case.
Let's take a quick look now at some of the day's other business stories. And the Australian government has raised $4.9 billion from the stock market debut of the state-owned health insurance Medibank. Shares in the company rose 10% in their first hours of trading. Sale of Medibank is part of Canberra's plan to sell off more than $100 billion worth of assets owned by the state. And Citigroup has been fined $15 million by US regulators for not properly supervising its analysts. The financial industry watchdog found that some traders had offered unofficial advice on stocks to sell during so-called ideas dinners and share roadshows. It comes as US authorities try to reinforce analysts' role as a source of unbiased opinion on shares.
Right, now a story now about two things that I personally am not sure they really go together. Coca-Cola and milk. You certainly wouldn't want to mix them together, would you? Tell us what Coca-Cola is doing with milk at the moment.
Well, it's their new growth area. Coca-Cola is going to be launching Fairlife milk onto shelves in the United States. It's got higher protein and less sugar and no lactose, actually, when you compare it to regular milk. But it's also going to cost twice the price of a regular litre of milk. A senior Coca-Cola executive has been telling a consumer conference in the US that they'll be building the brand, but they expect to rain money in good time. This is at a time that milk sales are actually falling in the United States, so we'll be able to see if Coke will be able to rebrand perhaps a product that they don't feel is doing so well.
As long as they don't make it fizzy, it's more or less fine by me.
I don't think that's in the plan.
Hopefully not. Thanks very much. Stephen Carroll, business editor, back in about an hour's time with more updates for you. Now we're going to move on with taking a look at what's grabbing headlines around the world with Flo Villamino. Hi. Welcome.